The Bitcoin ETF hype has come and gone, and the pattern on the monthly candle is looking rather nasty. If this pattern continues throughout the month and we get a close in this direction, it is not going to spell good things for Bitcoin in the short term. However, we could see some positive signs for Bitcoin later in the year, but there is a massive lie that is getting told to us time in, time out in the markets, and that is not going to go anywhere. But the data says otherwise. The media has not stopped throwing evidence our way of a potential recession in 2024. This would be the fourth straight year that they are calling for a recession. Now, I want to share with you the data and the facts that show that it is very unlikely that we would see a recession. I'm telling you exactly what we want to look at in today's video and hopefully arm you with the data that you need in order to get through 2024, because it's not going to be an easy ride, as we've seen after the ETF hype of January. The markets are seeing mixed signals, which is leading to a lot of lies coming out in the media. So let's focus on the data, the facts, and of course the charts and the cycles, as you've reached your home of macro cycle analysis. Make sure you hit that like and subscribe so you remain up to date with the facts coming out from the markets. All right. Let's head into the first piece of info. This is the chart that you want to be focused on for 2024. It gives you a lot of information in a very small frame here. The percentage return and the positive results over the last 90 years are outstanding. Don't let this one slide when you hear about recessions in 2024. And if we do hear about corrections and see corrections for Bitcoin and crypto, pay attention to what happens in years that have been up after a down year. And so this is the year that we are heading into now. We have many data points over the last 90 years, with 3 of them being negative. And I'll show you on the charts just how negative they are in comparison to the previous year. But in terms of a percentage return, it is very, very minor. The lies that we continue to be told is that the markets must collapse. The markets must go into recession. But the data, as we've been looking at over the last several years on the channel, has continued to tell us otherwise. That's why I always bang on about hitting that subscribe button so you stay up to date and clear out the noise in your news feeds. So this one here is looking at the S&P 500 and how the market goes up. We're also in a presidential cycle year. We're also in the last years of the 18.6 year cycle. And we're also in the second year of the Bitcoin cycle. Basically just looking at it from a low point and breaking it down into some simple years where you would be accumulating Bitcoin, breaking it out and breaking it down into altcoins, and then looking at that altcoin mania for the third year before you get the subsequent collapse. Now, before we get too far ahead, let's have a look at this year, because the massive lies that are coming and continue to come are the recession lies and the crashes and the big collapses. So this is looking at the year that follows a down, then an up. A down 2022, an up 2023, and what happens next. Typically, what has happened in a super clean nutshell, 86% of the time you get another up year. Now, you can also look at the presidential cycle years as well, and we're heading into number 4 here, 4th year of the cycle. And you can see that this happens plenty of times. In the 4th year, there has been no negative years. Some are finally starting to see, although there's no guarantee, if you are heading into a presidential year, well, the candidates are likely going to try and push the market as hard as they possibly can to ensure that it's a positive result so that they could get re-elected. That is working out very well in the timing of things when we look at the 18.6 year cycle. For the next candidate in 2028, things may be slightly different for them, but not different in terms of the macro cycle. So let's focus on where we are now for 2024 and the results that we have right here. You can see for the last 60 years, going back to the 1960s, there has not been one negative year after a down, then an up, and that following year is typically an up. These white arrows show you all of those years. You can see that they might be running into a final top. They might be at the start of mega stellar runs. They might have had a the following year after the up year actually go down and take out the lows, but then close higher like the pandemic. That is an absolutely rare signal, and you don't see it very often, if at all, apart from the pandemic year. Each of these other years going back to the 60s have been positives. You got a down, an up, and then the next year was up. a down, an up, the next year was up. And as I said, it could be leading into the end stage of the cycle, which is why I bring up the 18.6 year, because we are heading into the end of that cycle. But we have a lot of good ahead of us. So looking at the market going all the way back to the 1920s, the three failed signals are here in 61, here in 38, and again in 1933. You had a down year, an up year, and the following year was down. But it was only down by 4%, and you can see the following years also ran up. This was the Great Depression. The following year, or the following signal that failed, you had 1938, a down, an up, and then another down. This was World War II. So very different times to what we're in right now. And this may come again. I suspect it will come again, but it's not the time for this particular signal to happen again. 1961 was the worst reaction that it had, a down, up, and down. And it was down by 11.8%. The following few years were up from there. So it was an excellent buy the dip opportunity. Now, these are the rare occasions. We haven't seen it since the 60s. Could it happen again? Of course it could. But the data and looking at the facts from the charts, we suspect that the markets are going to continue up from that point. So if we can get past the headlines that we'll probably see throughout 2024, especially surrounding interest rates or inflation, the cost of living, the rising costs of commodities, we're probably going to see some sort of positive result based on where we sit in the cycle. No guarantees, but let's just continue to follow where the facts are from the data. So if we are going to see some positive signs in the market, well, it could probably spill over into Bitcoin and cryptos. However, what we're seeing at the moment on the monthly candle for BTC is your graveyard doji. Essentially a huge run up, a huge pullback, which is essentially selling. So buying into the top, selling as the market comes down. And if the market continues to close at this point around this level, it's not going to be a great signal to continue on for the following months. So that leads us into the halving. And for the halving, most suspect that Bitcoin will continue up from that point. And so the other piece of the puzzle that we want to look at is what happens during the first couple of years of BTC, basically the Bitcoin bull market. Now we always measure the bull market from the cycle low, not from the breakout point when Bitcoin breaks into new all-time highs, not from the first pump up, not from the higher low, not from any of those points. The bull market measurement is always from the cycle low so that you can get a stable picture of the overall cycle. So in this case, we're looking at multiple corrections before the big pandemonium, the big mayhem, and where the market goes ballistic. In this case, we have done 1, 2 accumulation areas. The previous cycle, 1, 2. Same thing for the cycle before that, 1, 2. And then you get this kind of small correction. Are we in that right now? And maybe if you've been watching the channel, that's pretty much what I'm alluding to here. I think that we are in that particular correction. The big thing that we got to note is how long that correction is and how severe it is. In previous cycles, it has not necessarily been that severe. The correction down hasn't necessarily been anything too substantial that would come back to test previous support levels. In previous cycles, Bitcoin has come up to test the 50%, get a correction, come back and retest the previous reaccumulation zone before heading up into the 50% again, breaking out, testing the all-time high, and away she goes. Now, from this point onwards, there are very few corrections that happen in the market. But what we want to be concerned with is what happens in this period. The corrections can last a couple of months, sometimes 6 months, as was the case in 2016. You can see where the market hit the 50%. It came back for a couple of months, reaccumulated throughout that period, 3, 4, into that 5th month before it finally broke the top in the 6th month. Now in the last cycle in 2020, Bitcoin came up, tested the 50% level, had a very significant correction after a huge run up that happened very, very quickly, paused, reaccumulated, then it tried to break out again at the end of 2020, which would line up with the end of 2024, basically the second half of 2024, which also lines up with when the presidential election occurs in November. So it tested the 50% again, a very short pullback here just for a month, and then the market broke out from that point. Now, in terms of timeframes, looking from that low to the second test, about 20 months. 21 months was the correction, 22 months was the breakout. And for the 2015 to 17 bull market, there was 17 months to the 50% level, couple of months pullback. So that was 19 months from the low. And then by your 22nd month, Bitcoin was breaking out of the 50% zone. It took roughly 25 to 26 months to test that all-time high. But we're mostly concerned with this area here as it lines up with the first half of 2024 as we lead into the halving. And the halving for 2016 was July 2016. So in terms of our timing right now, we are 14 months into this run to the upside. So we're sitting a little more similar to 2016 where it took 17 months to run it up into that top. So if we're currently at 14 months, the halving happens roughly around that sort of 17-month point from that low in this cycle. Then the 22 months to break out of the 50%, break out of these tops that have been set at 49,000, which also line up with the monthly lower swing top that happened in the bear market back in March 2022. 22 months takes us out to September of 2024. So getting close to that presidential election. As traders and investors, it is easy to get complacent in our own analysis. And although this cycle looks a little more similar to 2015, 2016, 2017, what happens on the left-hand side of the chart here, the black side, is still unknown. And it's up to us to be detectives and be able to pivot in our decisions and what we do in the market. And so although January could turn out to be a doji on the monthly and correct underneath the 50% level, that doesn't mean that we have to wait until the later half of 2024 to see any sort of breakout of $49,000. Although it could happen, we need to be flexible in our thoughts. We need to be able to pivot if things change. And what I mean by that is just looking at 2020. What if we get a mixture of what happens here and what happens here in terms of 2016 and into 2020, and we get something that is roughly similar? We get a rhyming of history, and maybe we don't have to wait the entire period out to 6 or 7 months like we did in 2016, but it's potentially something shorter, 2 or 3 months. We come back into the halving, and then Bitcoin starts to break back above and hold above the 50% level and start to close at those levels again. That is something that we don't know what happens in the black side of the chart, what happens later in the year. But we do see that in each occasion, Bitcoin does test the level, correct, and then come back above. And we have a strong year building. We have a strong case for another good year based on the 90 years of history, looking at how the S&P reacts to market conditions after a down year, then an up year. Typically, we see another up year. We're also in a presidential election year. We're also in the later stages of the 18.6 year cycle, which we know are very, very powerful. And all of this is looking pretty similar to what's happened in previous cycles. And so although we continue to get lied about crashes and recessions and Great Depressions and more downside, in reality, it may not be as severe, but we potentially would see some sort of correction down to the levels that we've covered here on the channel. Hit the subscribe and the like button so you can stay up to date with those levels. And the next thing looking forward to is what happens to Bitcoin at the end of the month, the end of January, as we start to close out to see how this signal happens. Will it form something more like what happened in 2019, where we get a pretty significant reversal from the 50%? Or will it be something a little more less severe, like what happened in 2016, because it's a little later in the cycle? Those questions are still to be answered. We have both of those questions there. They're the things we need to stay on top of going into the halving. Now, being prepared for that correction is really, really important. We have ideas of where it could land to the south side. We can see to the downside, somewhere in the mid to high 30s is a pretty reasonable target. Somewhere underneath that is probably unlikely. Not impossible, but probably unlikely that we get to those levels. So be on alert to anyone that is telling you this Bitcoin has to go back down to $30,000. It doesn't have to do anything. What we want to focus on is what it's showing us in the charts. And in terms of timing, time to the upside. We've seen it doing the longest stretch it has done in this entire bull market. Bitcoin is at 4 straight months up, and the longest so far was 3 months into the February top before it crashed down into the banking crisis low in March. From there, a month up, a couple of months down, month up, couple of months down. And so that gives us another signal to the downside. Maybe if we do get this correction, we could see a couple of months to the downside, maybe February, maybe March. Then you've got your price target as well to have a look at. So in the past, for these areas of BTC, It's done a month down, another month down. Here it did 6 months. We ran up very strong for 6 months and then a pullback for 6. And so we're not anything like what we were back in 2019. Huge mania into this peak before we got the collapse. So we look back to the previous cycles, 2016, 17, even after 10 months, although this was a solid grind up, it only had a 2-month correction. Then it only had very short corrections here. This one was less than 1 month. This one, 1 month. The previous ones, 1 month, 1 month. And so if we look forward to where we are in this current cycle, just paying attention to the potential of a correction, but not the possibility of a major recession, because you can bet your bottom dollar if we do see corrections in the stock markets as we hit all-time highs, if we do see corrections in Bitcoin as we hit major price resistance, anything to the downside could be seen as a possibility of further downside, major downside, because of the significant price targets that each of these markets have already hit. So just like 2020 and 2016, it seems like we're into that second year of the Bitcoin cycle. Basically, when it's going to be better to be holding altcoins instead of Bitcoin, it's the time where we typically see some sort of significant corrections, the last significant corrections before we go into some sort of mania hyperdrive into that third year. And of course, the presidential election cycle is also upon us, which would potentially see big things happening for the S&P 500 as well. Stay tuned, like and subscribe. It's your home of macro cycle analysis, just looking at the facts, the data, the charts, and of course, the cycles. I'll see you guys back here at the next video. Take care. Until then, peace out.